Welcome back to another Macro Monday, everyone. Today is Monday the 24th of July. It is episode 3. Let's jump straight into the video. I'd like to thank the sponsor of this video, Black Bull Markets, our New Zealand-based ECN broker. For the purpose of this video, you can go ahead and click the link down below or anywhere around this video. Sign up with no minimum deposit and you can go ahead and enjoy TradingView Pro for free. So go ahead, click the link anywhere below or around this video and go ahead and give some thanks to the sponsors of this video. So with inflation cooling in the US, all eyes on the Fed, all eyes on what their view is going forward and whether or not they will see this data as enough, right? Will they see this data as enough? Do they think the rate of change in inflation is sufficient? And the question is, do we remain at these levels? That's the big question. You got Euro resting at good levels of daily support, cable resting at good levels of daily support, but you also have dollar quite firmly above 101. So without further ado, let's jump on the charts and see what's what. Right, firstly, on the dollar index, dollar has now broken back above 101. 101 clearly was a valid area for sellers to turn up, but this morning, given the fact that Eurozone PMIs and UK PMIs really came out a lot weaker than expected, there really is that alternative, and that is dollar. When there is nothing else, let that be the lesson for today. When there is nothing else, meaning everything's selling off, there is dollar. That's the lesson for today. When there's nothing else, there is dollar. And dollar obviously firm right now in the day, with the likes of Euro still sinking a lot lower. You got cable resting on daily levels at 108. You got Kiwi more than likely going to continue. I expected a bit of a deeper correction into 62.50, but more than likely going to continue lower. You got the likes of gold reacting beautifully out of lower time frame levels of support, now possibly resistance over there. I did expect a bit of a deeper correction this morning into 1975, but it seems that we have reacted out of these levels. So for me personally, going into the FOMC, it is crucial that I position myself accordingly. Meaning, the market right now over the past 2 weeks during the Fed blackout has been positioning for a very negative and dovish Fed. Meaning, the fact that the Fed have reiterated their data dependency and data is coming out a lot cooler, the labor market still remains quite firm. Despite showing some cracks of weakness there, the labor market's still extremely strong. Is this the Fed's chance to rewrite market expectations? Is this the Fed's chance to rewrite market pricing? I think so. So for me, how I'm going to position myself is knowing that should the market get the aggressive Powell that they're not expecting, that's the risk reward. And that risk reward there, folks, is in the likes of selling gold rallies. Gold more than likely going to crack below 1950. You got the likes of Euro. I had Euro last week. I'm still in a partial position that I'm holding on the Euro, but I favor selling the rallies on the Euro. I favor getting back into the Euro should we have that risk reward. So what I mean by that is, Euro obviously positioned itself way up at the highs of 112.50. If the Fed have the opportunity to rewrite market expectations, which they will, how's the market going to perceive that? Where is the risk reward? So selling the rallies in the Euro, selling the rallies in the Aussie. Should the Aussie give us an opportunity back into 68? Anything above 68, I'd love to fade any Aussie strength there. So Aussie strength, I think this will be the trade of the week for me. If we have any Aussie strength, I'd love to fade it. So anything into 68 on Aussie dollar with a 30-point stop. Looking at much lower pricing on Aussie dollar. With the slowdown in China, as I mentioned last week's episode, the canary in the coal mine being China, I really do expect that growth to slow down and to filter through into commodity-based currencies. So the Aussie and the Kiwi really going to continue to get hit. Kiwi dollar straight out of the highs. Brandon, if you're watching this, shout out for that 64 call on Kiwi. So nice little follow through there on Kiwi to the downside. And why is that? You got commodity-based currencies, Aussie and Kiwi, weak because of China. And you've had that dollar recovery this week, right? Trying to refix market expectations. And if I look at it, I'm still of that camp. I'm still of the belief that we are going to have a continuation and we could possibly have dips on dollar being bought, because if there's nothing else, and if everything else is selling off, and there's uncertainty everywhere else, there's dollar. And I want to keep that in mind. So I'm more weighted on dollar trading higher. I'm more weighted on, even if the Fed hike by 25 and this is the last hike and they announce a pause, I am still of the belief in one way or another, dollar bulls will shine, and I could be wrong. All it's going to cost me is a 20 or 30 point stop on a position, and that's all it's going to cost me. But I'm more weighted to the upside. Looking at dollar over there, any dips are, in my opinion, going to get bought. Cable, same thing. Cable is resting at an important daily level of support. Last week we had the short, took the short, beautiful ride to the downside, and I like where it is. If I look at the prior 2 trading days, we can see some exhaustion over there on Friday's closure. Could we have this dip being bought today? Possibly. Right, possibly. It keeps clearing these lows. Every time it clears the lows, it has a bit of a correction. Are we at some point going to have a bit of a continuation to the upside? So should we see that weak PAL, right? Should we have that dovish FOMC meeting on Wednesday? We could have a higher cable, a higher pound, which in my opinion could get faded. What is a fade? A fade is selling any strength that you see which shouldn't be there. So keep in mind, if there's nothing else, and I'll leave you on that note, if there's nothing else, you still have dollar. Crypto, obviously still floating around here up at the 30k mark on BTC. There really is a lot of uncertainty around whether or not the most recent decision from the judge regarding the Ripple case is true or not. There are rumors that the SEC want to challenge that decision. So crypto really on the back foot there. You got XRP trading at 68 cents, making an attempt to the downside. I would love 55 cents. If I could see 55 cents again, boy oh boy, we're gonna load up some more. So anyway, into 55 cents, it is still a way away, but I am uber bullish on XRP now. I always have been, but any dip on this could be bought, right? We know, if you have been in XRP as long as I have, you know that rallies get sold and dips get bought. So if you were an individual to buy the dip and you profited on this rally, don't be afraid of taking profit, right? Never be afraid of taking profit. No one ever went broke taking profit. And as much as you have this long-term horizon, your job as a trader is to understand where you're entering, but also plan that exit beforehand, so you have that exit before you even have your entry. So that's XRP. Majority of crypto trading to the downside there. So yeah, I would say dollar yen, I mentioned that in the beginning as well. I will be looking at dollar yen along with dollar CAD, so we'll run through those two and then call it a day. Should we have a bit of a continuation there on dollar yen from where it is, fine, but I would still like it lower into 140.50. If we have that 140.50, I could be looking at buying dollar yen dips. Dollar CAD nicely back into the downside over there, straight into my Fib region. I drew this out this morning on my live London call. If we do have any bullish reversals out of this price, then dollar CAD could be on the radar once again. I like the price action. I like it where it is. I'm not going to give everything away on this video, but if you paid attention last week, you'll know why I want to buy this. But nice little intraday trade last week. If you go ahead and measure the legs, these little impulsive legs to the upside have now been fulfilled. I would like to see a continuation should we have that firm dollar, but the fact that oil keeps rallying, that keeps suppressing the price of dollar CAD. But GBP USD floating in and around that daily level of support of 128, and then obviously euro floating around these levels. Should we have any rally on the euro, I personally would like to fade that strength, so keep that in mind. And I'll leave you on that note. If there's nothing else, there's dollar. But folks, have a good week. Trade safe. Keep that risk tight. Please know everything I've shared in this video is what I'm going to be doing on my own money and on my own capital, and is not financial advice at all. But go ahead and support the sponsors of this video by clicking the link down below anywhere around this video. Go ahead and sign up at Black Bull Markets. You can go ahead and claim your free Trading View Pro. But I'll see you next week, Monday. Have a good trading week. And yeah, trade safe. Keep that risk tight. And I'll see you then.